Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we make financial education a lot of fun. We keep it simple and real. I'm joined today by my good friends Noah Davidson, Corey Halliday. We're going to do a market update today. Is all the tariff stuff over? We had that big 9% drop and we've battled back with a pause. What does this mean? Could this resume? What's going to happen with tariff issues? Blah, blah, blah. We're going to go through it. But first, like, subscribe, hit your notification bell. Go to yourinvestingclass.com. Now, investingclass.com, that's where the free stuff is. Who doesn't like free stuff? Everyone likes free stuff, especially when it's as valuable as this. Right now on your investing class, we don't have a class. We have an ebook you can download. You can watch it read it at your leisure, at your own pace. The reason it's an important one is it's designed to help people take their first steps, make a quantum leap towards their financial goals. A lot of people love to get information about general financial education, general finance, but how do you actually start getting the habits to move forward and really change and move the needle to where it needs to be? So go to yourinvestingclass.com, download the ebook. With that, we'll do brief introductions. Let's start with Corey this time.
Yeah, excited to be here. So I got started in the markets decades ago, 25 years ago, and started trading, investing, got licensed, worked my way up the ladder, eventually ran an options division as a Series 4 options principal, and I continue to trade, invest, educate, and just love the markets.
Fantastic. Noah Davidson.
I am a 28-year market veteran. I just did the math in my head, and I don't feel that old, but I am that old. And, I started trading back in the late 90s, put a lot of time, effort, energy, and money into my education. I've been teaching people about trading and investing for the last 20-some-odd years. And it's been a heck of a ride. I really enjoy helping people learn how to get out there, get after it, and just do more with their money.
It's such an advice world where people think that the key to wealth is to get the right advice. I want a financial advisor. I want advice. Where here at the Cash Flow Academy, obviously we're about education. We're an academy. And I'll tell you hands down, being smart is a lot better than being reliant on someone else's so-called smarts. And the data bears out that you really can do better with your own education, and it's a lot more fun to find out what type of investor you can be.
It is.
With that, we're going to do a little market update, and I'm interested to hear you guys' opinions. Last summer, about a year ago, not quite a year ago, last June of 2020, what would have been, 2024. I don't know what year it is. 2024, we were texting back and forth, and the timbre, the tone of our messages, which is always fairly jovial, but Corey started to express concerns, and that's what spawned our armor class, which was a huge advantage. We got more letters than we've ever got the week of the 9% drop. That I think it was a Monday, 9% drop with the tariff scares. We got more letters from people saying, hey, man, I saved this, and this made me, and it was great, and thank you. It was all armor students because they learned how to protect against big downward
declines
like that. So Trump, I don't know. I think he blinked. I think he did. The markets reacted so poorly to the uncertainty. And what I did is I got on, for example, I've looked at Dow Chemical, which I talk about a lot, and I own that free and clear. It's paid for itself since I bought it through dividends and writing options easily. So I don't have any money in the deal anymore, and I would never sell it because the price is down. The price is actually down below where I bought it, but that doesn't bother me when you have no money in it. It just still produces the same cash flow and the same dividend it always did. It's just the price is lower. It's like a house that dropped in price, but the renters still are under the same lease, right?
Yeah.
So who cares? And if your house was bequeathed to you and you didn't have any money in it, who cares?
Yep.
So anyway, I was listening to their call, because I was curious. I knew someone would ask about their dividend. They've paid a dividend since 1912 and never missed. That's a long time to pay a dividend. They merged with DuPont for a little bit. They kind of had a short marriage with them, then they got divorced. It was interesting because they sustained it through that, and they've always had this dividend that they've paid since 1912. So the pressure on them for their investors to pay that out is huge. Now, when I bought them, the payout ratio wasn't great, wasn't bad. It was about 70. So they paid out 70% of the money they made. Now it's much higher than that. It's rough for them to sustain it. It's over 100%. So they're losing money paying the
out
dividend.
the dividend.
Great for me. I'm still getting my money. But long term, that's not sustainable.
It's not sustainable because either they need more earnings so that the earnings overcome,
expenses.
or they have to cut the dividend or something to get under that. Because you can't keep borrowing infinite amount of time to pay the dividend at some point.
What made me curious to listen to the call was I knew someone would. Well, first I wanted to hear what their plans were.
Yeah.
Right. And they've been in these situations before. You can't have a dividend payout. They've been in worse spots than this before and continue to pay it. They're so big. God, I got my watch talking to me, and I don't know how to tell it to shut up. So it's giving me every little alert in the world here. So what's interesting is they're going to curtail some stuff, but the thing that was most telling about that call, and I think it's representative of a lot of calls that you could listen to, is they we're in international business and we have raw materials in a lot of places, so we're fairly insulated against tariffs because we have so many different footprints around the world. Yeah. But that said, the uncertainty of it, they're going to do less business. They had planned to put billions of dollars into a new facility. Not going to build it. They're going to postpone that and put that on ice. And they just went through all the things they've done in the past. They're a company that actually can expand and contract their businesses. For a company that size, I was impressed with what they had to say. So they're going to get smaller to get profitable. And someone asked about the dividend. They were kind of ambiguous about it, like these should be, but they didn't give any guidance one way or the other. Well, we've always paid a dividend. It's important to blah, blah, blah. But more important than the dividend was the uncertainty companies are feeling, not knowing what the rules are. It doesn't matter if we have tariffs or not. The problem is if we're tweeting out what we think instead of what we talked about, that's what's tough for these companies. Is it's not like we're going to the negotiation table talking, then coming back and reporting on what happened. We're just saying, 30%, 10%.
You know what markets like? Certainty.
They love certainty.
You know what they don't like? Uncertainty.
And so that uncertainty is, my feeling is, and this is, I don't have any data to back it up. My feeling is that we had this first plunge. This might be very brilliant. This first plunge, then we blink and say, well, we'll do a pause, and then it bounces back up. And so when you go back to that problem again, people are like, well, it wasn't that bad.
I think you're right.
Is it planned? Is that savvy?
I read The Art of the Deal in high school. I think the idea.
Oh boy.
I really did. I found it on my dad's.
Really?
I found it on my dad's bookshelf, and I read it. I'm like, all right, well, that was interesting. Terrible read.
Trump signed my copies. So they were very nice. Robert and Trump wrote 2 books together, and they signed them and sent it to me. So I have a signed copy by the president. So there you go.
Well, I think there was a shock and awe, kind of like and I think the idea is bring people to the negotiating table. And, at the end of the day, tariffs they're not a tax on China. They're a tax on corporations, the consumers,
it passes
importing from China. It's an import tax. And so it does have that inflationary effect. But who's that going to hit the hardest? It's going to hit Apple. It's going to hit the manufacturers that are bringing the goods and services in.
It's interesting because he said that, the part of the argument for the U.S. was that, well, we're not going to have to pay for it. These other countries are going to have to pay for it. Well, but then we're also talking to, like, he's ticked off at Walmart because they're talking about raising their prices. And I'm going, well, wait, you said they weren't going to have to pay for it. That other, you know what I mean? So there are corporations that they want that certainty. Even if you're going to do tariffs, tell us what it is, how much it is, where it's going to be from. And we can adjust and we can get supplies from other countries. We can make changes. We can do things to continue. But there is this level of uncertainty around it that makes it very difficult for corporations. And that's what you're hearing in these earnings calls is they're saying, we don't know what's going to happen, so we're holding off on this project, or we're not going to do these capital expenditures. The thing about fundamentals is they're so slow moving.
Oh yeah, they take forever.
Fundamentals take forever. I mean, the U.S. economy is massive. It takes time for the U.S. economy to slow down, to speed up, to this, to that. I mean, it's just fundamentals are very long term. Whereas, and this is part of what's good about trading is you can be quick on the technicals and you can see price changes and so on. Fundamentals, I mean, GDP is going to shift, and generally speaking, it takes time for these things. It takes, the unemployment rate has to be rising for a period of time to where that hits a tipping point. And now there's enough that's coming, from people not having a job that it's now influencing the economy. But a little shift in unemployment here or there is not really going to matter. It takes time for these things to play out. And that's why I worry that the market's reaction was very sharp to the downside, which I think was an overreaction, because the VIX at 60 doesn't make any sense to me. Like, I thought that was an overreaction because
really,
think about the VIX at 60.
Really severe.
The only time you've been higher was COVID and the global financial crisis. And both of those were absolute chaos because COVID, you had businesses shut down, nobody going anywhere. Sports were shut down. People were locked up in houses. In global financial crisis, you had Lehman and Bear Stearns collapsing. So for these tariffs to be that big, I didn't think made.
Unless, here's my take on that. Unless they just see tariffs as a domino,
right,
in the front of a big bunch of dominoes.
Right, but even that would take such a time. That's why I didn't think that
the quickness of it.
The quickness, like VIX at 60 was never going to really stay there.
Yeah.
Because even if, let's say
what a great trade for our students, though. We
phenomenal.
got so many people had inexpensive calls on the VIX.
On the VIX, and huge.
I mean, the letters we got when that thing blew up, people were like, "Are you kidding me?" Because those are high triple-digit returns.
Oh yeah,
they're awesome.
Quadruple, quintuple, like it's big numbers.
Huge.
And the VIX, what's amazing about that is it was pretty. I would say the market doesn't give you so many obvious situations, but we talked about this to our students in coaching and the other programs. Was look, the VIX at 60, that's not really sustainable.
It's not.
Because we're in the economy's fine compared to the global financial crisis. It's fine compared to COVID. This might be the first domino, but that means I call it an earthquake, and then you kind of collapse, and then you'll get aftershocks after. Those come months after. So we're not out of the woods on tariffs, but this is something that's really one domino in the midst of more dominoes that I think are going to play out over the next few years that create market problems.
But I still think Armor is, if you haven't taken the Armor class, I'll plug it now. Armor's worth taking because I don't see, the biggest question mark is the impact of AI, because AI over the next 10 years is going to make production for every business boom. Every major business will have better manufacturing, better shipping, better inventory control, better R&D, better marketing, better advertising, better data, better everything because of AI. So you got to own production. You have to own production. Yep. But before that happens, I really see a similar dot-com bust before a second. Yeah, the dot-com boom, then the bust. And the bust kind of sorted out all the baloney. It's like evolution, the survival of the fittest, right? Natural selection almost. Yep. And then you had the FANG trade emerge, right? You had the Netflix and the Googles and the Apples.
Now do we call it the Magnificent Seven or whatever
it is?
Oh, and that's really, those are the corporations that the tariffs hit the hardest. So, and you look at how the indices are weighted. They're so heavily weighted on those major corporations that are doing so much business overseas in China that are really affected by that tax. And so I think the knee-jerk reaction, I think you're right, Corey. I think it was a big overreaction. But I don't necessarily think we're out of the woods yet. I think The
That's
market's the
the
rally.
question.
I have to admit, the market rally has been surprising, like just amazing recovery.
surprised.
And I'd almost say that that's an overreaction
Yes.
too. So you had an overreaction down, you had an overreaction up. Very good for the trader. Like
Yeah.
Fantastic.
Armor. I mean, incredible
better
if you
for
know.
us.
Yeah, because
People been
now,
asking me, I'm like, premium. I love a high VIX.
yeah, and I haven't had the chance to re-up on my VIX trade yet because I haven't really had that signal.
I
but
wanna
I'm
see the
ready
team.
to.
I wanna
I'm ready
see
to buy
teams.
some more.
Well,
I wanna see
the VIX is down
teams.
at 18
Yeah.
right
18
now.
right
18-ish,
now.
17,
Yeah.
yeah.
You give me a 16 VIX and I'm buying calls.
Yeah, and I'm looking for a signal.
You gonna
Basically,
buy calls or a call spread?
That's a good question. I'll buy some of both probably. But what I'm looking for is you'll see the pivot. You'll see a big up day in the VIX,
And
bullish candle, and then I'm in for the
Yeah.
next run.
So markets rallied up. The S&P is at around 6,000 today, and as of today, and that's pretty overextended from a short
Pretty
term,
amazing.
just a short term technical perspective. That's what I would consider overbought. Those all time highs are just kind of hovering out there, so it's going up into retesting that zone.
Crazy,
we're a
man.
couple hundred points, I think,
Yeah,
from the
and we've got
all-time highs.
90-day pauses on the tariffs, and so
Interesting stuff.
It's just
And what's crazy is if the tariffs work out, it'll be a boon.
yeah, for sure.
It'll be a boon, probably an overreaction of the boon. When we come back, we're gonna take a break. I'm gonna ask the same question as how this affects your trading, but I'm also gonna share. Like, I didn't know very much about tariffs, and so this was an opportunity for me to learn. And I have to thank every single person that watches, listens, and cares about this podcast. We have a lot more people on audio listening, many more than watch on video. I guess people are commuting. Please do not fall asleep while listening.
Well,
to
that's a
this
good
wheel.
call because my face
Yeah.
is meant for radio.
Don't. As the least handsome of the three, I resemble that remark. But it's been an opportunity for me to reach out. And we're not Joe Rogan, obviously, but we have enough of you that listen that if people have something to say, generally when we call them, they're pretty interested in coming on. And so I've been able to get some guests, or I shouldn't say my producers have been able to get some guests, some from, major, the Washington think tanks, the policy, the guys that advise the guys who make the policy. And I've had some wonderful interviews on tariffs, and it's been a great education for me. So when it comes back, I'll share one or two of the tidbits I've gained from my study of tariffs lately. And then I'll ask you guys how this is going to play out most likely, and how we're going to position during the pause with all this overreaction when we come back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to the Cashflow Academy podcast. I'm your host, Andy Tanner. This is where investor education is fun, simple, and real. And I'm joined by Noah Davidson and Corey Halliday. We've been talking about tariffs. And I will tell you, it has been an interesting education. I think one of the things that is hard about the tariffs is it can be divisive globally. Now, what do I mean by that? Well, you got to choose sides. So kind of go with me on this. Let's say you're Vietnam. Now, Vietnam is a really cool country, and I've been fortunate to go there and speak and go to events. Richard Tan, who is wonderful, invited me there. In fact, I went in there to fill in once. Mary Buffett was scheduled to speak at this thing in Vietnam, and like a week before, she breaks her leg. She fell down or something. So Mary's quite a fundamental analyst. She's got some good books out.
Yeah, and that's Warren's daughter.
Yeah. So Richard Tan calls me. He says, "Hey, man, Mary broke her leg." I'm like, "Well, I'm not a Buffett." He goes, "You're going to have to do." I says, "I'll go." So I hopped on a plane and did a keynote for his event down there, and it was great. In fact, they even had Mary pipe in. Actually, she did
really?
pipe in through
Cool.
the Zoom or however they had it. But Vietnam is a vibrant, youthful country. I mean, they're hungry for capitalism. They're hungry for wealth. They ride their little scooters around, and just a youthful country. United States is old, Japan is old, Vietnam's young. They're hungry. So you're Vietnam, and you want to grow. And so when we slap China with tariffs, China gets on the phone, calls Vietnam, says, "Hey, we need to build some plants in Vietnam. Are you interested?" And then it says made in Vietnam, not made in China.
Yeah. That's called offshoring for the most
Yeah,
part.
and in fact, there's another word for it that has the word tariff in it. It escapes me. One of these think tank experts, listen to a different podcast. I'll have to go back and review. But there's actually a name for that circumnavigation that is a cooler name than circumnavigation. Tariff navigation. I don't know what it is.
Yeah, they're supposed to report the country of origin, but there's ways around it.
And you got
so
parts
that
coming from 30 different countries.
exactly, and so they'll make it the country of origin
the
be the one with the
preponderance.
lowest tariff, right?
Exactly, and the preponderance of the stuff. So when they tried to do this in the first Trump administration, China just said, "No, that's fine, slap us."
Get around it.
We don't
Yep.
buy a lot of stuff, they don't buy a lot of our stuff. We still buy a lot of their stuff. So that was a huge thing, because now think about this global dynamic geopolitically. Okay, so Vietnam gets a call from China saying, "You want to build a plant? You want to have us start? You want workers? You want jobs? Want to build our stuff there?" Well, then the United States is going to call and say, "Hey, who's your ally?
Yeah.
Pick, because we're going to tariff you on all your stuff if you get in bed with those guys." So there's a divisiveness
Yeah.
that is politically dangerous,
Yeah.
because now it's not now you're going to drag everybody into this. You're going to drag into this. So
Yeah.
now you got to decide.
People start
You-
picking sides.
you wanna go to
it's the old
Russia?
adage,
Do
you
you
can exchange goods and services, you can exchange bullets. Like that's kind of how
It's kind of how it is.
historically
Yeah.
it's been.
Yeah. So then you look at it, and I talked to these guys. I thought it's really interesting, because you can have Russia invade Ukraine, and that's certainly something that gets our attention. But if China tried to do anything with Taiwan, that's really going to get our attention, because that's semiconductors.
Yeah.
And that's an escalation that if China felt threatened enough and they wanted to escalate, that'd be a great way for them to escalate. And if we have any bluffs to call, they say, "You know what? We think Taiwan's ours now. What are you going to do about it?" And does the American people, are we ready to militarily say, "Oh no"? And because that's not going to be just like, we shouldn't give. I shouldn't get political, I guess, but we shouldn't give Ukraine money. We should loan it to them. You want to fight the war, we'll loan you the money, but we should be giving it to them. But I guess that's Congress has to see what interest is what interest. But if Taiwan started to, that would be a great way for China to escalate this. China can't. You mentioned the selling off of the weaponry of selling off the bonds. Now, this has precedence. After World War II, President Eisenhower's in the White House. We've just lost all this blood and treasure. And the UK wanted to control the Suez Canal again. So they roll their tanks in there, and they're going to take it over. They're going to take control of that canal. And they want help. So they call up Eisenhower, and they say, "Hey, come help us out." And Eisenhower says, "We just did 2 world wars. We're done. We don't want to fight. We don't want any more blood. In fact, not only will we not help you, you're going to get out of there. We're going to sell all your sterling bonds that we have, because we helped you fund the war, and we have all your sterling bonds. We'll crash the British pound. We'll sell all of it off, and their tanks were gone in 2 weeks."
Yeah.
So there is precedent militarily of, okay, you're gonna tariff China, where we have the leverage is that we as a present, we are the best economy to suck up all their products and give them all our money. So that they want to slap their customer in the face, because we are their best and biggest customer.
Yeah.
Well, and that's where it hits them. Is it's not a tax, like, again, on China. It's a tax on the import, and so what happens is it's an opportunity cost. They lose opportunity cost because orders drop, because they're going to order a similar product from a manufacturer in India. And so, I mean, that's kind of where it hits them. And about 30% of their GDP is direct to the U.S. They'll say it's lower, but once you factor in that circumnavigation they're doing on tariffs, it's about 30%.
But I think President Trump, when he's calling for the Fed to lower rates to stimulate, I think he knows that, and I think this is true. I think you have a little bit of an inflationary bump from the prices going up. But then that settles into actually a deflationary long term, because the lubrication of the economy, like it is interesting when you put the brakes on free trade, that can slow the economy, which I think could be deflationary in a way. Now, certainly it is deflationary to offshore things, but it's also deflationary to have the economy collapse, collapse, but contract.
It's bad for economic growth, right?
Correct.
I mean, it's bad for the economy, which is GDP. But then it also could be, inflationary in terms of prices, because we're gonna spend more. I mean, look, the U.S., we're going to pay employees a lot more if we're going to manufacture. If we're going to really bring back manufacturing here.
But that's the second thing that we got to talk about is that doesn't happen in 2 weeks.
No, that's very long term. But, I mean, I don't think we want to bring back all of this manufacturing. I think we're better off as a services economy. That's where we've grown and excelled. And we want to get a lot of these products. My argument would be that we want these other countries to be customers, because we don't want to fight them, and you don't shoot your customer. If we're in business together, there's better relations.
Producers make the money.
Yeah.
We want to be a net producer in our personal lives. We want to be a net producer in our corporation.
Yep.
We want to be a net producer as a country. We want to be a net producer because that's where the money flows to.
Yeah. And, we have to look at it from the standpoint of, at what cost do these things happen? If you look at the history of tariffs, it's not a great history for economic growth. And like, if you go back and look at the tariffs back in the 1920s, or early 1930s, I should say, it really made the Great Depression what it was, so severe and so forth. And look, pretty much everyone agrees when they go back and look. I think it was Reed Smoot or whatever the history was. Basically, they were involved in massive amounts of tariffs that essentially created embargoes, where the U.S. was now not trading with all these other countries, and other countries were doing it too. And it made the Great Depression so severe. And people that lived through the Great Depression, they were never the same. They were savers. They were always
money away.
Yeah. And so, I remember my grandparents, the way that they lived their life was just like worried about how much money they would have. And I think they were pretty well off. And my grandpa probably had 3 pairs of pants or something that he would just rotate through, and just, very, very careful with his money, because they lived through that. And we live such a different...
Don't act like you have more than 3 pairs of pants.
Well, that's
we
true.
Know, Corey.
I have
Corey,
5.
I have a little bit of my
pants.
Grandpa Fred in me, I would say.
I'll tell you what. Corey bought a new car once, and I about fell out of my chair. I was like, you what? You bought a car?
I had driven the other one, in fairness to me, for
You still have
23
your truck?
years. Yes, my son took it over.
So I have an old truck, and you have an old truck. I can't remember which one of our trucks is older, though.
Yeah, mine was a 2001.
You got me by a couple of years.
Yeah, so still have it. My son took it over.
Corey's a freaking miser. I'm just telling you now.
But realistically, that's some of the risk that comes about from tariffs is, I'm not saying we'll have another Great Depression, but the general wealth of every country tends to go down when there's more tariffs, not less. When there's fewer tariffs, now this is part of the Trump administration argument but they're not playing fair. China and some of these countries, and I get that argument too, is you want countries to play fair, but the U.S. also has some advantages that we're not
For sure.
audibly speaking about, So you can say, well, they're playing unfair in this way. And we might say, well, yeah, but we have advantages over here as well. So just as a general rule, I'm not a fan of tariffs. And I think the history of them has been a general reduction in growth and the wealth of the world and more conflict, not less.
So I mean, part of it's like reciprocal tariffs. And, if tariffs are so bad, why do so many other countries have tariffs on U.S. goods and services and things of that nature? I think that they are a negotiating tool.
Yeah.
For sure, it's a big negotiating tool. Because when they slapped on the big tariffs on China, they slapped the blanket tariffs on 10% everywhere to avoid the circumnavigation problem. And it really is more of a negotiating chip. Like, hey, we're going to negotiate. And I think at the end of the day, the potential to renegotiate trade deals it's phenomenal.
There's nothing wrong with that.
Yeah.
Yeah, there's nothing wrong with coming to the table. But
and I would say those countries that have had tariffs, are they flourishing because of those tariffs? Probably not.
Yeah.
Have they had better growth than the U.S. that hasn't had the tariffs on them? No, not at all. So from the standpoint of looking at history, again, I think the general rule is you start slapping tariffs and it's going to hurt you in ways that you didn't instinctively think about.
It's certainly combative. It's certainly adversarial. It's certainly not great partnership.
And people will go elsewhere to do their
uniting,
business.
It's dividing.
Yeah,
for sure.
and they'll go
Tariffs.
elsewhere to do their business.
It's a beautiful word.
We should have more, not less.
More tariffs.
It's a beautiful word. I can't do an impression.
I can't either.
How we trading this? The idea is we have a pause.
Yeah.
I think there's much more. There's a lot of other things to think about downward pressure. I think more about our fiscal irresponsibility. I think more about our debt. I think about those things more, and just the fact that it's just hard to grow at the rates we've grown at since COVID. I mean, it's just our GDP has not grown in step with stock markets. So I just think it's just hard to grow this much. But what do you say about tariff, the pause? Get your crystal ball out, man.
Yeah. Well, to me, I don't look at the tariffs. I think the Democrats will say, oh, it's catastrophic. But had it not been by Trump, they might have been doing their own tariffs, So it's one of those
you
things
can
where
go back and find all those sound bites
for sure, where they were on board. And so I think
Schumer.
Yeah, I don't take a
Schumer
political
was screaming for tariffs.
Yeah, and now he's so opposed.
Oh,
So
yeah.
they all do that, right? So
Yeah.
to me, it's not political. It's more just, okay, well, here's the numbers. And I don't think it's catastrophic for the market. I just think it's one bad domino. I just think it's a negative.
That's why I think we saw the 9%.
Yeah.
I think people saw, because look at all of our other Armor Zero metrics. If you look at the Schiller, for example, is a good one. Look what you're paying for stuff right now. Isn't it oversized? And so I thought it was a domino.
Yeah, it's just one of. So it's not like it's, the catastrophic this or that. It's just one more negative thing that tends to hurt U.S. growth, tends to hurt corporations, tends to hurt, when you value the business of the S&P 500, you got to look at the price and you got to look at the earnings. And I think the earnings take a hit from tariffs. It's not going to be this big boom that helps them. It's going to have more of a detrimental. And I also don't think it's like catastrophic to the earnings of the S&P, but overall it just hurts them. So you have to value.
If it hurts the earnings, it'll drag down the price.
Right, because the PE ratio is more expensive and such.
And they're not happening in a vacuum, though.
Right.
That's the other big thing is you've got a lot of other policy changes, deregulation. You've got deregulation in the energy sector. You've got deregulation in the banking sector, which I think
those can be some good things.
That can be some
sure.
interesting,
sure.
push things that'll help. You got the price of oil way down. It's not at rock bottom yet, but after that little Middle East tour, I think we're going to see pretty darn cheap petroleum and just flooded the marketplace with inventory. So I think we're going to have cheap fuel, which is another lubricant of the economy is cheap energy. And so, if they happen in a vacuum, they're probably a
That
bigger
would
deal.
really
Yeah.
it really helps the economy when you can get your stuff transported cheaper.
Yep.
When you're
Yeah.
putting it on the truck and the train and the plane and the car for less. Man, that affects everything.
Well, you could see OPEC Plus came out and immediately increased production of oil, which of course pushes the price down.
Yeah, it does.
And there's no question Trump was negotiating that
You got
and
a
saying,
plane out of the deal. Are you kidding?
yeah, but there's no
How do
question
the frackers
that
feel? How
behind
do
the
frackers
scenes,
feel about
Trump
that?
was putting some pressure and saying, hey, if you want some of the things you want, you got to help me, because he wants oil. That's one of the things that he always points to. So he wants gas prices. He wants to be able to point to that and say, hey, look at what's happening with me. And immediately they increased production of oil.
How do the frackers in the U.S. feel about that?
Well, they're going to shut down at a certain level. So
It's
you
about
start getting in
$50
this
a
It's
barrel.
$40 a barrel.
Is
Yeah,
it
you-
40?
Well, 40,
Yeah,
45, whatever it is. I mean,
is that's their break even.
it's
So you
7
start getting
for the Saudis, I think. I think the
Oh, yeah.
Saudis lifting costs. I mean, you put a straw. It's like Jed Krampus shooting at some food.
Yeah.
Up come the ground.
put a
above
straw
them
in the
crude.
sand and
Yeah, throw
oil
a straw
comes
in
out.
there and you get squirted in the eye.
But yeah, Saudi can make money up with oil above 7, but
Yeah.
those frackers and everyone, they
it's in
need
the
it
40s,
above 50.
probably. Yeah.
And they're going to, same thing. I mean, those energy companies are feeling the pinch and they're going to shut down some production. So what does that do? Well, it hurts those U.S. corporations. It doesn't really hurt Saudi Arabia because they're still making a profit. So it's one of those things where the U.S. gets hurt from this, where some of these other countries are still okay, and so that's why they can do that.
Trade in the market with tariffs.
Yeah, I mean, I think what tends to happen at market tops as opposed to bottoms, so market bottoms are usually V-shaped. They happen quickly. You
Tops
don't
are
catch
arc.
the bottom. Tops are almost always a big arc because it just takes such a long time.
I'm watching to see if they
So-
can break those previous highs. Because typically what will happen is if there's a shock that then leads to a subsequent downturn, the market fails to make a new high. It'll come in close, it'll touch, it'll double top.
Yeah.
It'll come in slightly lower. So we're just below those previous thresholds. And there's a lot of upward momentum. And so if that momentum can carry through and the market can establish newer highs, I think that builds a little bit more optimism and confidence. But if it fails to take out the previous highs, people kind of stop and look at each other like, "Are you buying? I don't know. Are you buying?
Yeah.
Are you buying?"
If we're not hitting a 60 VIX again, is the VIX still a good trade? I think it is. If I can get a 16 VIX, a 15 VIX.
Yeah, we're right around the levels where I would be very
Interested.
interested in the VIX again.
Position size on stuff like that.
Pretty small. I mean, with the VIX, like normally hedging wise, you can spend a couple of
This
percent.
is an expense trade. I mean, it really is. It's buying insurance. It's speculative a bit,
Yeah.
but it's such a huge risk reward ratio.
Yeah. The nice thing about
attractive.
the VIX, like if you look at, say you were going to invest in hedging, you were going to put on a hedge for an entire portfolio. So your portfolio is worth 100%. You might spend 3-4% on S&P puts, and that would get you hedged. For the VIX, it might cost you 1%.
Yeah.
It might cost you half of 1% because you get so much more bang for your buck.
Well, you get double
and this
leverage. You're going to get leverage of a call, which is 100 to 1 anyway.
Yeah.
You get the general inherent leverage of an option, but then you have a 5% drop in the S&P correlating to a
hundreds of percent move in the VIX.
which can translate into 1,000% on your money.
And that's why we taught that in Armor is it's a very
Low cost,
very low
fixed.
cost, great way to hedge, but you don't hold to expiration.
can't do
what
it
did we
late.
emphasize in Armor? We said it's a trade.
Pull
It's-
it when you
when you get that huge surge, then you pull
Take
it
your
off.
money.
You at least take off half. You do things to lock in some of that
and different
profit.
than a future, the nice thing about an options is fixed risk, so you have a limited downside but unlimited protection.
Yep.
If the market goes to the downside, but if the market were to rise, you have a fixed
Cost.
fixed cost, so that's nice.
Yep. Love it.
The nice thing about a future is you don't have the time decay element, so you're not having to pay for time decay.
Yeah.
But the leverage but the VIX is not a good instrument after the fact. You can't put that seatbelt on during the car ride,
Right.
Or you're
You
crazy.
catch it very
you're gonna
early.
you're going to get hit the
Yeah.
wrong way. But if you catch it early with the VIX in the teens, time Time expiration on it. How far out you going? I go 3 months or more as a rule.
General rule. Exactly. If we're buying options, we generally look out a little further, 3 months or more as a general idea. With the VIX, every once in a while I'll go like a 2 month out, but usually 2 month would be like the minimum. I'm not buying front months.
That means you think something bad's going to happen
quickly.
Yeah.
What's okay? I'm really grilling Corey, the options expert here. I should ask this to know and see.
Well,
what
I
he
just
says.
turn around and ask Corey basically.
Let's
Like,
see
what
how
do you
this
think,
works.
Corey?
I'm going to ask you, and then you can ask him, and then he asks me, and we'll just go around in a circle. No, if you're going to do a spread, let's do a debit spread. What are your strikes? Let's say it was today. What did you say? It's 18. So you're buying the 20s, you're buying the 22s.
Well, and I've determined that based off of some of the other Greeks. So I kind of look at it as a delta proposition. I typically am buying out of the money with the delta between 30 and 40.
Okay.
And that's where I find that I'm not paying a ton of volatility premium right at the money.
Yep.
But you got time decay, and so you're just basically buying a cheaper insurance policy that probably doesn't pay out as much as an in-the-money option would, but it didn't cost as much. And so
how far out of the money do you go to write? What's the difference between your strikes to where it's just worth a spread instead of just the long call?
That's the nice thing about the
question.
VIX is the premiums are so high further out. So say you bought a 22, you could sell the 30 and you'd recoup a lot of what you spent.
And
it's quite shocking. And you got an 8-point spread. It's quite shocking how much those further and further out of the money. Now, the problem with the spread is it's a little bit more difficult to trade in and out of it more quickly.
Because your
you get a
delta
lot
isn't going to be as big.
Right. You get a lot better bang for your buck just buying the long call for the quick exit, but you spend a lot more money. And so usually I'll do a hybrid where I'll buy a couple of calls and I'll buy a few spreads and I'll do some, combination of things across different landscapes. And, ultimately when I'm doing it, it's spending a good deal of money. It's thousands of dollars, but
sure worked out for that drop. I'll tell you.
Oh yeah.
We had so many students like, are you kidding me? It's like everyone won the dang
so
lottery.
These would be important skills to learn, right?
Yeah.
Let's plug Armor.
Yeah.
If you haven't been in Armor, get in it. And I'll tell you, I'll be frank, it might be above your pay grade. If you haven't taken the 4 pillars first, or even an ultimate option or an adjustment playbook class. I mean, Armor is a high level class because it's a high level class.
Yeah.
But at least if you took it, you'd know what you don't know, and you'd know what to study. Armor is like my brother who's a police officer. He doesn't shoot his gun every day. Now he's a homicide detective, so he comes after the fact. But back when he was in the shooting, the bullet's going over your head. There's training that you do on a consistent and regular basis for those intermittent moments of high intensity where you're calm and you know what you're doing. So Armor is not like run-of-the-mill risk management like you would have in your regular swing trading or option trading, or you're going to delta hedge an iron condor or whatever. That's run-of-the-mill stuff. This class is for this VIX type stuff and learning how to beta weight and nominal values, and it's for catastrophic events that happen intermittently. You don't get shot at every day as a police officer, depending on where your beat is, I guess.
But what's fun about Armor is it's that training, it's that preparation for those. And then we give you the key elements to look for, the checklist. Yeah. So if you have the VIX doing this and the S&P doing this and the GDP at this and and so we give them a checklist so they know, okay, are we in Armor 1? Are we in Armor 2? Are we in Armor 3?
For those that have taken the Armor class, we kind of went from Armor 0 to a bit of an Armor 1, I felt. And now I feel we're maybe in an Armor 0, or an Armor 1 to an Armor 2 is what I meant to say. We probably slipped from Armor 1 into Armor 2. Are we back to Armor 1 again?
I would say that we're in the early stages we're like at the end of Armor 1 and early stages of Armor 2 is the way I look at it.
That's worth buying a big skull.
Well, this is basically this is the DEF CON level. Like how much, how
we did it opposite though. DEFCON goes up or DEFCON goes down, we go up.
Yes.
Yep.
Armor level 0 is everything's fine. Armor level 1 is like,
Well,
Armor level 2
it's-
is like, holy crap.
Armor level 1 is almost sort of like that euphoria
Yeah.
before the
Right.
problems began, and that's
Right.
kind of where we were living.
That's where we
we-
say though.
Yeah.
No one
Oh,
else
yeah.
is saying
But we start to get out ahead
The
of
reason
it.
we're
Yeah.
saying is because no one else is saying
Yeah, exactly.
That's what Armor
It's
1
sort
is.
of like, when you think about it from a sentiment perspective, it's where you start to see things, behavioral things, where you go, well, this makes no sense. Like like when, what are some of the meme coins that people just like Trump and Melania coins, and people are just
Come on,
making
we're not going to
these.
talk about fart coin.
Yeah,
Come on.
I mean,
There's not.
There is a
there is a
fart
fart
coin.
coin, and it and if I told you it went to a market cap that was a
think we did it.
billion, that was $1 billion, would you believe it?
kidding
But
me?
those are the sort of behavioral
Yeah.
things where you're like, okay, this is just stupid at this point, right? It's just stupidity where people are willing to throw money at the prospect of something. It's just a pure gamble because there's no revenues, no earnings,
It's
nothing,
hot air.
and there never will be.
Or methane.
Yeah, it's the
I got it.
tulip.
I see what you did there. That was classic.
No, it wasn't
My kid
that
would
good.
really appreciate that joke.
Yeah.
It wasn't really that good.
It's the tulip bubble, but you don't even get the pretty
yeah,
flower.
exactly.
They're blowing bubbles.
It's the tulip bubble, but it stinks.
Yeah, exactly.
Unbelievable. My wife loves a good past gas joke.
Yeah.
I don't think she appreciates these, but hey, that's not a great note to end on, but we're going to do it anyway. Interesting times, and it's always the same. The people that are educated do better than the people that don't. So
Yeah.
go to yourinvestingclass.com, download your stuff. That's a first start. Look, you might not be ready for Armor. That's fine. Get there, though, as soon as you can. Start with free stuff. Go to yourinvestingclass.com, start learning what the basics are and developing habits that will move the needle and will change your life. So I thank Corey, I thank Noah, and most of all, we thank you for watching the Cash Flow Academy podcast. This is where we make financial education fun, simple, and real. We'll see you next time.